The gentleman from Florida, Mr. Putnam.
Hi, Mr. Chairman. I'll begin with Mr. Leppert. You made the point to Mr. Posey that any of these enhancements should be temporary. Could you define that for us? Should that be driven by market conditions?
I think it is driven by market conditions. The hope is, and I think it's the hope of all of us, that we're going to see a normalcy of market. But the reality of it is we're not there today. We've lost the insurers, the enhancers. They've gone away. So there's going to have to be some type of support mechanism, at least for a period of time. Now, again, I want to stress again from the city standpoint, we're not looking for some long-term program, and we're not looking for any type of a bailout of operating budgets. We're fundamentally talking capital budgets, and we're talking a period of time to give some normalcy to this so that the private side can come back in, and I think over time it will. I can't give you an answer when it will, but I think over time it will come in. But until that point of time, as I said in my testimony, there are hundreds of billions of dollars worth of projects out there that are important to re-energize the infrastructure of this country as well as create jobs.
But given the uncertain state of state and local budgets, given the uncertain state of the federal budget, but you look at what's going on in California, look at what Florida legislature has just struggled with, isn't this just, the increased rates, is that not just market discipline? In other words, you refer to normalcy. What is the new normal given these circumstances we're operating under?
Well, I think normal would coming back to at least some historical sense of the spreads between municipals, corporates, municipals, treasuries, those sorts of things. I mean, clearly to look at those spreads, those are so far out of historically what we've seen that it clearly puts cities and state governments in a precarious position for financing going forward. And as I said, it's holding up in projects that we believe that are very important.
Mr. Watkins, can you describe for us, share some of your experiences in terms of walking back to last summer when the bottom fell out of the market and any impact that federal response has had on liquidity and pricing and where you find yourself today as a result?
I think that there have been tangible benefits to the market in general in terms of restoring confidence to the market, and you see it with respect to the interest rates for large frequent issuers with very simple credit structures. That market is functioning reasonably well now, so our ability to issue state general obligation bonds at favorable rates is good. But then you look at the vast majority of issuers across the nation, which are smaller, infrequent issuers. There are cities, counties, school districts across the nation that have need to access capital for infrastructure. And when you fall into the A category, you fall off a cliff. And I'm talking to the tune of 100 basis points or 1%. Now, that may not sound like a lot, but when you do the bond math and extrapolate the cost of that 1% to borrowed money over 30 years, the cost to a local government is significant. And it's an embedded cost that's there for the next 30 years. It's there incrementally, but when you look at the cost, the aggregate cost of that borrowing, it is significant. And it's occurring at a time when budgets are already under pressure. And that's the segment of the market that needs the temporary assistance to gain access to markets and normalize the interest rates and the cost of funding capital projects.
Mr. Leppert, did you want to add anything to that?
I think that says it well. The only thing I would add to that is keep in mind that it may not just be large and small players at the state and local level. It very well could be a large player, but the project itself is rated in a category, so you'll fall into that. So don't assume it's just big versus small. It could be a larger player at the state or the local level that has a project that falls into the A.
Thank you. Thank you, Mr. Chairman.
We now